So even if, a couple hours of an accountant's time feels expensive to you, what's even more expensive is watching $20,000 of your money just walk right out the door in a tax bill that you could have saved yourself if you'd done some tax planning. Welcome to the Sunlight Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, tax pro, and the founder of Sunlight Tax. If you're a creative or soul-centered entrepreneur or wellness practitioner who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello, welcome. Today, I want to answer a listener question, which is a great one, which is, when do you actually need to hire an accountant? And when is it fine to go ahead and do your taxes on your own, like use TurboTax, for example? This question was actually submitted by Stacy, a listener to the Sunlight Podcast. So Stacy, thank you. And when I say that I really do listen when you DM me suggestions for podcast episodes, I really do. I have a little spreadsheet where I track your suggestions, and almost every one that has been suggested, I have gotten onto my content calendar. So I definitely want you to know that you can let me know what you'd like me to cover in terms of your taxes and money. And if it feels appropriate for all the listeners of this show, I will do it. All right, so let's get started. How do you know when you actually need an accountant, and how do you know when you can do it yourself? So first, I just want to start off with kind of the scenario. One thing is, in this country, there is no tax education, and this is not a total accident. We allow lobbying in this country, and the two largest tax prep companies lobby the US government to keep our tax code complicated and to deliberately make you feel like it's too confusing for you to handle on your own. Why? Well, the thing is, if you are intimidated and you have no idea how it all works and you feel like you couldn't possibly handle it on your own, well, you have to buy their software, or you have to walk into one of their offices in your local strip mall to get your taxes done, right? And I think that's kind of a terrible way to run. I think that's a really bad scenario. I wish we didn't do it that way in this country. That said, there's a lot of marketing out there to say, like, taxes are horrible, you couldn't possibly do it on your own. And I do think a lot of that is actually silly, right? If you get a basic education in your taxes, then a lot of this is very, very doable. And, I'm here to say that's my mission. I am hoping to be the one to bring you that education to help you feel more empowered when it comes to your taxes, especially. Think of the beauty industry. Their marketing for a long, long time has been like, you're flawed, you're broken, you're ugly. No one is going to like you unless you buy our products. Well, the tax industry kind of works in a similar fashion, right? You couldn't possibly do this on your own. You're behind. Everybody else knows this. And that just is not true. All right. So can you do it on your own? When should you, and when should you not? So there are legitimate times that you do want to consult with an expert, okay? And that is reasonable, and it's not a defeat. In fact, it's very smart at those times to do it. But I want to help you kind of clarify today through this episode how to know when those times are upon you. Now, I want to just paint a little picture for you. Let's just take an example of a doctor, right? A doctor could have a podcast and they could teach you a lot about maintaining your health. They could teach you about body chemistry. They could teach you about your hormones, right? You could learn a lot about your health from a doctor, and you could take a lot of initiative with that information and do a lot of great healthy things and make a lot of great healthy choices, right? Should you then turn around and go do your own heart surgery? I'm going to say no, right? Like, there are times, right? You can be a really educated person and you can get to know the stuff that is reasonable for a non-specialist to know. But that doesn't mean that you are going to, when it comes to accounting, that you're going to know all of the ins and outs of a whole field and profession that you're not a professional in. And that's okay too. Okay. So I don't want you to feel like you are a failure if you're trying to be very educated about this stuff, but you still have times where you need an expert. Like, you can be really healthy and knowledgeable about your health and not do your own heart surgery. Okay. So taxes are the same, maybe to a lesser degree. All right. But let's get into how you actually are going to know. Okay. So there's a couple of categories I want to talk about. The first category of a time that you really do want to consult with an accountant is when there is a big change in your life circumstances or in your finances. And often these things go together. For example, when you get married, that is a big life change, and it's also a big financial change. And typically the year that you file your first joint tax return, that is a good moment to have some consulting with an expert around your taxes. Why? Because when two people who formerly filed single come together and file a married filing joint tax return, now instead of two different tax rates, you have one single tax rate. And you're also signing on the legal obligation to everything in your spouse's taxes, right? So you should know that a married filing joint return, technically speaking, it is what is called a joint and severable agreement, meaning if you get severed from your spouse, your signature on that joint tax return actually keeps you on the hook for anything that your spouse did and put on there, even if your spouse walks out the door and never comes back and you can't find them. So a joint return does have some responsibility to it. And this is why it is a really good idea to speak to an expert to get educated about how it's going to impact your finances and, frankly, your legal obligations once you sign a joint tax return together. So that's an example of a big life change where it's a good idea to get some advice. Now, do you have to stick with that accountant for the rest of your married filing joint life? No, absolutely not. You can go and get some advising and then you can be done, right? Then you can do it on your own. Once you kind of get in the flow of doing your joint tax return, you don't necessarily have to stay with the accountant.
Hey, real quick, I just wanted to pop in and tell you that my book, Taxes for Humans, Simplify Your Taxes and Change the World When You're Self-Employed, is available for the first time ever as a pre-order. Pre-orders are massively important to the success of this book, and I am so grateful and will send you gifts for your pre-order. If you're interested in getting this super empowering, super funny book, you can go to sunlighttax.com/book. All the details you need are there, and more details will be forthcoming. And thank you so much. I hope you enjoy Taxes for Humans. I've worked really hard to make it awesome for you, and your pre-order means the world to me.
So anytime you have a big financial shift in your life, that is a good time to consult with an accountant, because you are not in that scenario going to be able to go look at past tax returns and apply them to your current tax return. And there may be laws around, for example, the realization of capital gains, for example, where there's going to be some tax implication that a professional will easily and quickly be able to spot and tell you about that you might not have known was coming without talking to them, right? So if you get, for example, a windfall grant, then that is a very, very key time to talk to a professional, in part because there's a lot of strategy that you can use when you have a big windfall in terms of protecting some of that money, shielding some of it from taxes by using different tax advantaged accounts. And it's a really good idea to take advantage of that. It's also very worth your money. So even if, a couple hours of an accountant's time feels expensive to you, what's even more expensive is watching $20,000 of your money just walk right out the door in a tax bill that you could have saved yourself if you'd done some tax planning. So that's a really good example. I'll give you an example that happened here in my practice. A friend of mine sold her business and only after that point came to me to ask for some help regarding the accounting surrounding the sale of the business. And that was a particular tragedy because selling a business is something you can do a lot of planning around before it happens. And you can help kind of space out the income, the tax bills, etc. You can structure the deal in a certain way to minimize the tax impact. But the fact is, once you actually do the sale, once you have the money in hand, your moment for planning is gone. There is no additional thing you can do at that point. So it is too late. So this was a really sad example because this friend came to me basically after there was anything we could do about it. So I want you to understand a general principle that you should know when it comes to taxes is that the moment you get money in your hands is typically the moment that the tax comes. So if you know you are going to get a big chunk of money in your hands, then before that money comes in is a very good opportunity for you to do some tax planning. And tax planning is worth its weight in gold. It is very valuable and it can save you a lot of money and a lot of headache and frankly, just an enormous tax bill that you might not otherwise have to pay. So a big cash infusion, a windfall, a big change in life circumstances, even planning a really big purchase. So of course, that's money going the other way. Planning a big purchase can be another moment for tax planning. These things are all really important, and you want to consult with a professional before you do the thing, not after. Now, there's also some tax planning that you might want to do around more general issues like life goals. For example, saving for retirement, saving for college, buying a house, for example, or starting a new business, right? So these are other moments where tax planning is a great idea. And this brings up a point I want to make with all of you, which is I think if you've never worked with accountants before, you might tend to put a lot of weight on the tax return and think that when you pay for a tax return that you're getting more than a tax return. And I am here to say, as a tax practitioner, that is not true. That is just not how the industry works. When you pay for a tax return, all you're getting is a tax return. Hopefully you're getting some review of that tax return, some explanation of what's inside it, and some ability to ask questions concerning the tax return and make different decisions if there are decision points within that return. But typically that is about the maximum that you get when it comes to paying for a tax return. Typically with a tax return, you do not get tax planning, okay? And the only way that you get things like help with your estimated quarterly taxes is generally if that practitioner is charging a higher dollar amount for that tax return. If you're getting a really inexpensive tax return from an accountant, they're not helping you with your estimated quarterly taxes. They're expecting an additional consult, additional payment for help with those. So basically, you're going to get what you pay for. And if it's an inexpensive tax return, you're probably not entitled to, a long appointment, a lot of explanation, a lot of handholding or question asking. Now, some, of course, you should get absolutely immediate questions about your tax return. You should absolutely be able to ask and have answered. But when it comes to things like strategy and planning, and even things possibly like estimated quarterly taxes, depending on how this practitioner structures their payments, if it's a very inexpensive tax return, again, this won't be included, then you should be expecting to pay additional time for that practitioner to sit down with you and do tax planning or calculating estimated quarterly taxes throughout the year, et cetera. And tax planning, just so you know, it's really worthwhile. Tax planning saves you a ton of money. And so typically it's going to be worth whatever amount that you pay for that accountant for their time. It's also important to know that tax planning is often best done not during tax season for a couple of reasons. One, your accountant is busy. Like they just don't have time and they're going to charge their highest rate if you're doing it in the middle of their busy season. Tax planning is awesome if you do it when that accountant really has a lot of time. If you want to do it in May, June, July, that's a great time to talk to your accountant. The accountant has lots of time, is feeling relaxed. They've had their vacation and gotten recharged after tax season. So that's a really great time to talk to your accountant. Year-end tax planning is another one that's really big and really important and can save you a lot of money. It can also get you on track to have a habit year after year that helps you save money, but also just tweak the areas of your life where you could have more money working hard for you. And so year-end tax planning is another really awesome tool that you can use an accountant for. Typically, you're going to do that towards the end of the year, October, November, December. If you wait until December 20th, you're not going to get an appointment. So if you want to do year-end tax planning, it's best to kind of note that on your calendar now and reach out, in October, maybe November latest, because of course, anytime there's a deadline coming up, there are other people trying to get on board before that deadline, and you will not be the first in line. Now, it is possible, and I certainly teach, I have done episodes of this podcast about year-end tax planning. I've done Instagram challenges on it in the past. So I like to teach this to a broader audience. You don't necessarily need to go to an accountant for a one-on-one appointment to get some really good information about some basic strategies. You can definitely listen to my podcast for that. And of course, I teach in a little bit more detail inside my Money Bootcamp program. But I'm just saying that is something where there are some general strategies that you can apply that you don't necessarily need one-on-one time to get. Okay, here's a second category when you need to actually consult with an accountant. And that is a category I'm calling shit that is complicated. So if you're going to do stuff that has special rules, special tax rules, you should consult an accountant for that kind of work. I'll give you an example. If you're going to make what is called a capital expenditure, that is something where you're going to basically build a new asset. For example, you're going to build a new studio building, right? That is something that's really important to consult with a professional over, because it's not something, there are special tax rules surrounding something like that, building a new building. There's depreciation. You are not allowed to expense a whole capital expenditure all in one year. So I've seen people, spend $100,000, $200,000 on building a new building for their work, thinking they're going to get that whole amount of expenditure as a deduction the next year. And you don't, because the tax rules don't work that way. So that's why something like that, an expenditure that's really big like that, you want to consult with a professional so that you get your head around when you actually do get the tax benefit, so that you don't get a rude, nasty surprise. You don't want to be planning on something that isn't actually true. Okay. Another one, for example, another thing in the category of shit that is complicated is if you're doing, for example, certain complex transactions, for example, something called a 1031 exchange. This is also known as a like-kind exchange. This is a kind of thing, it's a really wonderful strategy. Basically, what a 1031 exchange is when you have a business asset, you can essentially sell it and within a certain time frame buy a similar asset. And unlike what I said before, where normally when you get cash in hand, when you make a sale of something, that moment you get taxed. A 1031 exchange, the whole point of this complicated rule is that even though you do have a moment where you have cash in hand, you defer the taxability so long as you meet these very specific timing criteria and buy the next asset. Okay, so we can do this with real estate. You could actually do it with equipment, machinery. So there are special rules about 1031 exchanges and there's timing involved. So if you miss the timing deadlines on a 1031 like-kind exchange, you just are going to get taxed. You will miss the whole benefit. So that is definitely in the category of shit that is complicated. And you want to make sure that you are working hand in glove with an accounting professional at that moment to make sure you hit the marks for your timing. Okay. And you understand what the tax implication is going to be. You also want to understand what happens when you do ultimately sell that asset, because of course there will be a big taxable moment at that time. All right. Now, many of you listening, don't worry if you are kind of confused about a 1031 exchange. I'm just giving an example of something that is complicated and that I would never recommend somebody to do alone. Don't worry if that never applies to you, or if you're like, wait, should I know about that? No, the answer is no, you don't need to know about that. But if you ever decide you want to do it, just consult a professional. Okay. Setting up payroll is another thing that I have actually seen people try to DIY, and I don't necessarily recommend that. The reason that I think you should consult a professional when you set up payroll is that when you run payroll, you are engaging with employment law and you are on the hook for it with your state. And even if you are running payroll because, for example, you start an S Corp and you're going to pay yourself, you actually are still on the hook for employment law in your state. Even though the person who's your employee is yourself, you still have to comply with employment tax law. And if you mistreat your employee, it doesn't matter that employee is you are not allowed to break the law. So it's really, really important that you check all the boxes exactly appropriately when you set up payroll. That is not a casual system. It is not a casual setup. Now, it doesn't need to be super hard. And I actually don't think you need to pay an accountant to run payroll for you every month, unless you have stuff that is super, super complex. That's going to be something very expensive if you're paying an accountant to do. Frankly, I use software called Gusto to run payroll, and I think it's awesome. It's pretty inexpensive, especially when compared to having an accountant do it manually. So I love Gusto software. I'll put a link in the show notes to my affiliate discount code. So because I use Gusto myself, I think it's awesome. I think it's really simple and straightforward. But even so, I still think, even though they have great tutorials on that site, I still think it's a good idea to just get a professional set of eyes on it and be like, am I checking these boxes correctly? Am I setting up with the state correctly? You want to make sure when you're running payroll, there are some compliance rules that are quite serious, and it's a very big deal that you are complying properly. Next category for when you do want to use an accountant is around strategy. Now, this kind of is very similar to tax planning, but you can't ask software, should I do this versus this, right? So when you have questions or when you have concerns about a strategy, whether you should do something this way versus that way, that's a good time to talk to a human being, to talk to an accountant. So for example, if you're having losses in your business, for example, and you're curious like what that means and how you should handle it and how long it can go on for, and if things are turning around in your business, that would be a good time to talk to a professional. Also, sometimes depreciation, if you buy really big assets in your business, buildings, really big equipment, for example, there are special depreciation rules. These can really help you, but those, when combined with a situation where you're having lots of losses, that's a strategy issue you probably want to check in with an accountant over, because accountants can choose different depreciation methods, and choosing different types of depreciation methods requires a little bit of knowledge about how the depreciation works and doing some planning in your business about when you expect income to come in and at what levels. And so to me, that would be an appropriate time to consult with an expert. Okay. Sometimes that are actually less concerning and where you don't necessarily need an accountant are, for example, doing calculations, right? So if you are setting up depreciation for the first time for some really big purchases, yes, that's more of a strategic area, and I would want you to consult with a professional. But if what you're doing is actually just continuing depreciation that you've had going in the past, that I'm less concerned about, because actually, so long as you input the information correctly in your software, it will continue the depreciation method that you had going before. And so typically the depreciation will be calculated and carried on correctly. So that's fine. I'm not too concerned about ongoing depreciation from past years. There's other stuff where there are calculations that are kind of complex, but you don't actually need to do the calculation yourself. So I'll give you an example here. Per diem meals expense is a really awesome expense that you can take when you do business travel. So when you're traveling for your business, you can take a meals expense, and you can do that one of two ways. First of all, you're only going to get half of the expense across the board. That's just an IRS baseline. And the funny thing about that is that the IRS basically has an attitude of, you're going to have to eat whether you're doing business or not. So arbitrarily, we're just going to say that half of your meal is not deductible, even if it's a deductible meal, just because you would have had to eat no matter what, right? So you only get 50% of your meals expenses basically across the board. However, given that, when you're traveling, you can either take what is called the actual expenses. So you can save your receipts and you will get 50% of the actual receipts from your travel meals. Or you can do this thing called the per diem meals expense. And for that, basically what you need to do is track the number of days that you are in a certain location and then track what location you're in. This is something that is okay to track on your calendar, for example, but you want to remember each year to pull it over into your taxes and use it on your tax software. Now, the per diem meals expense can be a little tricky to calculate because one, you have to know where to look it up. For domestic travel, you're going to look it up on the GSA website. For international travel, you look it up on the State Department website. And there's different lookup tools and sort of guidance on how you do it. And you can do it yourself. There's also a different calculation for your first and last day of travel. And rather than actually get into what those rules are here and make your head spin about the calculation, what I'm going to tell you is so long as you track the number of days you're traveling and where you travel to, that's all you need to plug into software. And the software itself has the calculation capability. So it can just do the calculation for you. So that's an example of a thing where you don't have to maintain the rule in your head. So long as you know what you need to track and you put that into your software, you will be fine. So that's a big category of thing where so long as you know the rules, software is completely fine. Okay. So I actually think that that is true in general for small businesses, people who have a Schedule C. When you know the rules about what you can deduct and what you can't, and things like how to track your per diem meals expense, like I just explained, then you can successfully file your own taxes using, TurboTax, H&R Block software, whatever it is. You can successfully do that on your own without a professional. And I think it's really empowering and awesome to be able to do that. Now, one other thing is that if you want to understand your taxes, in theory, you could understand your taxes if you work with an accountant, right? I think a lot of people go to accountants because they want to understand their taxes. Some people don't. Some people just say, here's my stuff. I don't want to see it. Just do it correctly, right? That is a real attitude that's out there. But some people really kind of want to know what's going on. I actually think that's really good. I think you should know what's going on in your own taxes, right? But in theory, you might get that information from your accountant. But what I find is that in practice, a lot of people do not get any understanding from their accountant, whether it is a cultural disconnect, whether it is like a feeling of shame or intimidation that you experience around your accountant. And this is far more common than accountants realize, I am here to tell you. But I think it's really great to understand your taxes. Of course, that's why I do what I do. That's why I have this podcast, and that's why I built my program. So I'm hoping that I can help you understand your taxes, whether or not you're going to an accountant or doing your taxes on your own, because I just think that's good for your citizenship and good for your own financial health. So I do think it's a little bit of a red flag if you're going to an accountant and they don't explain anything to you and they are kind of bullying or intimidating. That's not good. I don't think accountants should be able to get away with that. And I think they should be called to account if they actually are doing that. The thing is, though, TurboTax, for example, I think it's really good software. To be totally honest with you, it's a really good value. And by all means, use it. I don't want to shame anybody for using TurboTax. I actually think it's great. And if you can use it, go for it. But the thing about it is, it's going to ask you these friendly questions, right? Did you do this? Did you do this year? Blah, blah, blah. And it kind of walks you through the tax return using these very friendly questions that are phrased in a sort of understandable, friendly way. But it's still kind of a black box. TurboTax doesn't tell you what it's doing with the answer that you give it. And so you don't have the ability to change around your strategy, right? So for example, if you're experiencing losses in your business and you're getting to a point where you've had losses for a little while, and you maybe really should have a conversation at that point with your accountant about like whether you should continue to take the losses and whether you know what the implications are in terms of your potential for audit and if there's ways to mitigate that risk. That would be a good time to talk to an accountant. TurboTax is just going to do it, just going to do what you say, right? So you might have, years and years of losses happening on your tax return because TurboTax is just asking you the question, and that's the factual truth. I did have a loss, right, for year 5, but maybe an accountant would be there to be like, hey, you know what, this is a thing we should discuss. That's kind of the difference. So I don't really know how to give you an answer to this. Frankly, sometimes accountants can be as much of a black box as TurboTax is. I don't think that's a sign of a great accountant. So I would be a little maybe looking around if that were my accountant. But so long as you have some baseline understanding, then I think it's absolutely fine to use software. So I hope that helps you kind of have a sense of when you should use an accountant and when it's fine to just use software. Basically, to summarize, when you have a big life change or a big financial change, or if you're about to get a big windfall or have a huge expenditure, those are really good times for some tax planning. Tax planning also, I want you to remember, does not necessarily happen at the time of your tax return. The tax return is typically your accountant's busiest time of year, and it's a difficult time to get good, thoughtful advice and guidance. So I want you to think about strategy and tax planning as something that you can separate from tax time. And actually, it's better for you if you do, because your accountant is more patient, more well-rested, less busy, and more able to really take time with you to explain things and walk you through strategy. And so that's how you get a better value out of that accountant, rather than asking them for a bunch of time at their worst and busiest and most stressed time of year. Okay, now not to get the accountants off the hook, I do think that if accountants are not walking you through what's going on inside your tax return for the year, that is a red flag about that accountant. And I don't think that people should be with accountants who don't give them any guidance whatsoever or any explanation about what is happening inside your tax return. So big life changes, big financial changes. If you have strategy or lots of questions, those are times that you want to go to a professional. Tax planning is another time you want to go to a professional. Aside from that, a basic education about your taxes is enough for you to be able to do your taxes on your own and know that you're getting every deduction that you should, taking advantage of every rule you should, and basically getting the most out of your taxes without spending a lot of money. So I hope that's helpful to you. If that has been helpful to you, will you let me know? Send me a DM on Instagram. I'm at Sunlight Tax. And if you like this episode, if you found it helpful, will you share it with a friend? It means so much to me. And that is one thing you can do that really helps this podcast reach more ears. And I really appreciate it. So thank you so much for listening. I will talk to you next week. Bye.
Thank you for listening. If you like the show, be sure to subscribe, leave a review. It really helps, and share it with a friend. I'm so grateful. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links we reference at sunlighttax.com/podcast.